Today we're going to be going over how we chart the gray box on Thinkorswim. It all comes from the fractals. It's been working very well. We started using it a lot more in 2025, and it's just basically finding a bunch of stack support or resistance across multiple fractal timeframes. Whether it's open states, clusters, percent odds, vectors, whatever it may be, we'll go over some examples in the timeframes I like to use. But feel free to mess around with it, see what works best for you, because there's so many different ways, so many different time frames. Some just may work better with your strategy than others. So our most recent one was actually just on Friday. It was a pretty uneventful trade. The zone held up perfectly, but there was just no real crazy reaction off of it. And let me grab the reasoning for it right now. As you can see so everyone can see my stream right now. We charted this out at 6:34. So when I do chart the gray zone, it's always going to be after market opens because we need the fractals to update, see where we are for the day, and then take our values based off of that, right? So on Friday, we had this open state on the 10-way 15-minute, one of the time frames I like to use. Then we also had on the 7-way 5-minute, if you load up 10 days, you can see we had this open state here as well as this cluster right here. So those clusters are showing us previous reversal points, so we can view those as areas of support or resistance, right? So we had an open state down at 530.73 and then a cluster at 531.3. Now continue to the 20-way 5-minute. Go ahead and load up 10 days. And you can see the same thing where we had this previous cluster, which is this right here, showing us that we've previously reversed in this area. So across all three of those time frames, the 7-way 5-minute, 10-way 15-minute, and 20-way 5-minute, we created this gray zone off of it. And the value was from 530.54 to 531.51. This was a dollar range. Typically though, we're gonna see them being anywhere from like 20 to 60 cents. So as you can see, we tested the top 3 times during the day. Each time rejected off. Do you always use those same fractal timeframes? Yeah, so I'll also occasionally mix in the 1-wave daily and sometimes the 7-wave 60-minute, but just because these are somewhat larger time frames, we don't always get levels that hit on this the same time we do on these smaller time frames. And that's the whole thing with the gray box, is we want to find as many confluences as possible. Like if we're tapping an open state on the 10-way 15-minute, but none of these other time frames, like say the 7-way 5-minute just has blank space to the upside and 20-way 5-minute just hugging pivot, like nothing going on, I typically wouldn't take a trade then, because I like at least minimum 2, but preferably all 3 of these to line up within a small range, and then that's what we look to play off of. And with that comes very little risk. So for example, I'll show you guys the trade we took. This is one of my favorite examples because it showcases both a win and a loss on the day. So this is the setup I really like to display for showing off the gray box. On April 2nd, we had 2 setups that formed, right? The first setup is going to be this gray zone you see right here. The first setup, you had the long median, which is something on the spread monster. This is also another thing, like when I chart these out, I'd like to get as many confluences as possible, whether it's using things from the spread monster, which we'll show here, or just having levels on the yellow box, like these white dashed lines, just giving you that extra confluence for taking the trades. For this one, the first short setup, we had long median at 476.43, which you can see right here on spread monster. And then you had the 20-way 5, and you had a cluster plus open state at 475.41 between the 10 and 20% odds. So right here. And then on the 10-way 15-minute, you had cluster plus open state at 476.10, which you can see right here. And then last up, the 7-way 5-minute cluster plus open state at 476.41, so right here. And the thing that's so nice about this strategy is we can chart this out way before we actually get to this point, and then all we're really looking for is a close above or below, depending which direction, to invalidate the setup. So we come in, we entered shorts at about 475.8. When we closed above right here, this 5-minute candle, we closed out and it was a 15% loss. Then you had the second setup, which was the wall long. So again, back to spread monster. You had our wall long up at 478.91. Then on the 20-way 5-minute, you had cluster plus open state at 479.12, plus it was at the 10% odds, showing that we had low percent chance of continuing higher. Then on the 10-way 15-minute, you had the 478.96 open state plus the 20% odds, and then last up 7-way 5-minute 478.83 cluster plus 5% odds, showing low percent chance of continuing higher. So when we came up, we entered shorts on this test. You can see, if I zoom in a little bit, we had no close above, so there was no reason to exit the trade. And we rode this down for, I want to say 300%. And now once we're actually in the trade, you have to start looking at, okay, well now what are we going to do to find our exits? And all we look at for that is going to be vector for looking for continuation of the downside for this example because we were in shorts. And then also we're going to look to target these open states to the downside now. So let me pull it up. You can see on the day, we said full exit was going to be between 473 to 472.5. Remember, we filled in on this open state, and now we were looking to target these open states to the downside. So you can see we had one at 472.86. We had another one at 473.03. And then you had this double bottom and open state at 472.64. So we used that. We were targeting pivot pretty much for our full exit between 473 and 472.5. And you can see how that worked out on the day. Pretty much being the low. Like, we didn't chart a gray box here, but technically with this strategy, you very well could have seen these stack of open states in this about 472.86, 473.03, and 472.64, and charted out a gray zone right in that area and taken longs off of it with that strategy. But because we'd already caught this whole move down, I just called it a day. So that's kind of how I like to pick targets and also see if we should hold the trade any longer once we're in it. Outside of using open states and clusters for our zones, we can also use vectors, which I'll show right here. Neither of these trades went for a crazy percent, but this is when we used vectors to make it. So you can see on the 7-way 60-minute, you had vector at 520.86. On the 7-way 5-minute, 521.87. 10-way 15-minute, 520.86. And last up, the 20-way 5-minute, 521.87. So we charted out that dollar range of vectors. We longed on the initial test, got about 60%, took a trim at this white dashed line on the yellow box. We entered in on the retest now short. Again, this went for about 50-60% and then got stop break even. And then we ended up chopping around it for a little bit. But that's how, with vectors, you can make these zones, and it's kind of like a pivot for the day. Like when we're holding above it, we look for upside, below it, downside, because when we're above vector, we look for continuation higher. Below vector, we look for continuation lower. Here's a pretty straightforward one. We go to just the day before, actually, right here. Again, the whole thing is we want as many confluences as possible, and one of those we can use is our yellow box. We had resistance at top yellow box, and then on top of that, you can see on the 10-way 15-minute, we had 523.82, 7-way 5-minute, 523.38, and 20-way 5-minute, 523.86, right? And all I was doing was finding these 10% odds clusters on the 10-way 15-minute. Same thing on the 7-way 5-minute. And on the 20-way 5-minute, you had this stack of clusters right here that we were marking out. We marked that out, entered shorts on the test, no close above. We got about 100% by the time we got to pivot. So it's a very simple and straightforward strategy. We're finding areas where we have multiple time frames and confluence, and if we close above, you exit the trade. So you're only ever risking anywhere from 10 to max 30-40%. Waiting for that close above, unless somehow it just starts chopping out like throughout the whole day. We never get a close above. Like an example was actually Friday, where it held very nicely, but just the low movement just kind of chopped out the cons. And like at this point, we entered in on the test. When we came back down, we were up about over $1 from entry, and the contracts were break even. So besides that, it's pretty straightforward. Do you look at those low time frame fractal charts when the move is happening or hours before, for example, reaching the 10% band? I look at it as we're approaching it, but then also these zones are typically charted anywhere from like 20 minutes before test or sometimes hours before. Like for example, on the April 2nd, that example, this zone here, this tweet was sent out at, where's the time? 7:39 a.m. So about 10:40 Eastern. And we didn't test this until about 10:10. So give or take 2.5 hours later. So these zones can be charted out way before we test. You just have to be aware of the potential for the fractals to change. So like before we entered in on this, I came back in the fractals and made sure like we hadn't had any pivot crossovers that then changed the value. Like we just trended up the whole day, so these values didn't change at all. So we came up, tested the open state there, same thing, tested the open state, the value hadn't changed at all. And then last up 10-way 15-minute, the value hadn't changed at all because we hadn't had any crosses over pivot. But that's something you need to be aware of, just making sure that the values don't change. But yeah, it can be anywhere. It can be charted anywhere from like 5 minutes before test or sometimes hours before. It really just depends on the day. But yeah, that's kind of. I can show more examples if anyone needs, but it's relatively straightforward. You can use anything from the yellow box, clusters, open states, percent bands. You just want it to have multiple confluence across a bunch of time frames to really give you that like high probability that we don't continue higher or lower from this point. And if we do, just cut it, look for the next trade. There's always going to be more. And you might not see a setup every single day. Like for example, this week we charted out a gray zone up here. It was a pretty large one. It was about 80 cents. And we just never got a test. So there's nothing really to do. Same thing here. Like on this day, we didn't even chart a gray zone because there was no levels that lined up across all the time frames that we liked. And then once we close below, we'll do this last example and then I'll answer any last questions. And then on April 23rd, this was a nice one. So right off of market open, you had the 10-way 15-minute. You had this two open states stacked up here at about 462.81. And then the 20-way 5-minute, same thing, right off of open. We were up at the 10% odds. You had the open state at about 462.09. And then the picture wasn't attached, but there was also on the 7-way 5-minute, it was the same thing where we were filling an open state. So we just charted that out. You also had the white dashed line on the yellow box for a little extra confluence. And you can see you had about a few tests of it. No close above, play to the short side, target these white dashed lines on the yellow box. But yeah, those are the examples I have for how I chart these zones out and how I play them. If there's any questions, feel free to ask.